Hello everyone. My name is Shyam. Am I audible in the room? Is it all okay? Yep, sounds good. Great. So it's good to be here virtually. I would have loved to join in person, but at least I'm able to join online and convey my thoughts regarding fintech and the payments industry in general. So a quick intro. My name is Shyam. I'm based in Dubai. Uh, I work with Mastercard, so that's where I met Manzoor, and him and I have been colleagues for a long time. I've been with Mastercard for almost 11 years now. Before that, I was with a company called UA Exchange, launching their payment products and prepaid card programs. I did my schooling. So I'm basically from Calicut. I did my schooling there. Then I did engineering from NIT Calicut, and I did MBA from IIM Bangalore, right? So all my studies have been in India, like primarily in Kerala and Bangalore. And then I started working in the Middle East. So uh, payments, like in terms of the importance of payments, we all know why it is important, right? For any activity you do, any transaction you do, you need to pay, you need to get paid. So paying and getting paid are like two things which happen throughout your lives, no matter what is it that you are doing, whether you are, a small business owner, whether you are a tech company leader, whether you are running a large organization, it doesn't matter. Paying and getting paid are important aspects of, of our society. So a company like Mastercard has been in existence for over 60 years now. The fundamental problem that payments or payment solutions are solving involves, somebody who is supposed to receive money and somebody who's supposed to pay. In most cases, there are person to merchant payments or person to person payments, right? So broadly, you can consider the entire payments transactions or set of payment transactions into these two types. So a person to merchant payment or a person to person payment. Now, on top of it, there are other things like person to government payments or person to or government to person, G to P, P to G, all of these, right? But in a rough classification, you can consider all of that within the whole P2M and P2P buckets. So the way the industry has evolved is just to give you a bit of history, right? So we started with cards as a method of payment. And now you have solutions like UPI, which are really taking over the world and eating into the cards business. So those are new type of payment technologies that have come into existence recently. But traditionally, the most popular way to pay was using cards. So you would go to your bank, a merchant would have their bank partner, and you as a consumer would be issued a card on which your funds would be residing or through which you can access the funds in a bank account or in a wallet or whatever, right? Basically, that's just the device or the access mechanism that you get to your funds, which is a card that is given to you. On the other side, the merchant will have a POS device, a point of sale device, which is used to pull money from the card, right? Broadly speaking. So the way the transaction used to work, or the way a card transaction works is, let's say I'm going to a coffee shop and I want to pay for coffee, let's say coffee and snacks, let's say 100, 200 rupees. So I go present my card to the merchant, which is this coffee shop, and that card and that merchant will use their point of sale device. Now it could be a swipe transaction, it could be a chip transaction, it could be a contactless transaction, which is a tap transaction, or it could be a QR transaction, right? So these are again the kind of popular methods of acceptance that exist at a merchant's end. So the merchant would then take my card and then whatever method of transaction is being used, it will first check whether I have the 200 rupees balance on my card or not, right? That step is called authorization. So once the confirmation is received that the authorization is approved, which means funds are available on my card or on the account linked to my card, then the merchant will proceed to deliver goods to me, right? Which means I get my coffee and snacks and then I walk away. So at the back end, what happens is this is really where the network or the technology that is powering this comes into play. So at the time of transaction, the message goes from the merchant to the merchant's bank, right? Let's say this coffee shop is banking with ICICI. So the message would go from the merchant, from that device at the merchant to the bank of the merchant saying, okay, Shyam has come. He wants to buy something for 200 rupees. Can you confirm if 200 rupees are available on his card or not? So the bank would then be connected to a network like Mastercard. And the bank, ICICI Bank, would send a message to Mastercard saying, okay, here is this particular card holder with card number, 1234, and it's asking for an authorization of 200 rupees. So Mastercard will then understand that, okay, this particular card number 1234 belongs to, a customer of HDFC Bank. So Mastercard would then send the message to HDFC saying, okay, card number 1234 is requesting authorization for 200 rupees. Does he have the balance in that card? Right? Then HDFC Bank systems would confirm back to Mastercard saying, yes, funds are available. And then Mastercard would relate back to ICICI Bank. And on the merchant end, the POS machine will confirm that, yes, funds are available. So that is the first step of the transaction. It's called authorization. After authorization happens, then is where the real money movement happens, right? So what you can see is when I'm authorizing the transaction, the money has not moved. The bank is just confirming that the money is available in my account and is putting a block on that amount, right? So they just block that amount. After that, end of the day, there is a process called clearing and settlement. So at the time of clearing and settlement is when this particular bank will submit all the transactions for all their merchants for the day, right? They will take all the transactions that have happened for all their merchants during that particular day and send to Mastercard saying, okay, there are these 100 merchants they have done a transaction total of, 1 lakh rupees. So I need 1 lakh rupees, right? So this is what the bank will inform. Then Mastercard will take that message and see, okay, who owes the who are the banks on the consumer side which will owe the 1 lakh rupees to ICICI, right? So then we understand that, okay, HDFC will owe, let's say, 20,000, Federal Bank will owe 50,000, and we actually do what is called the settlement fund flow, where we take the money from the customer's bank and put it into the merchant's bank, which is ICICI in this case. So that's typically how a transaction flow happens in the payment world, right? And whatever you see right now, whether it is UPI, whether it is QR payments, whether it is open banking, account to account, real-time payments, these are all evolutions that have happened on this basic model. So what I described is the foundational model. It's called the four-party model because there are four parties in this ecosystem, right? So you have the merchant, you have the merchant's bank, you have the customer, you have the customer's bank, right? Or the cardholder and cardholder's bank. That is called the four-party model. So once we are making sure that the transaction is completed, both the customer and the merchant, they're happy and they proceed with their lives. So as a network, it is the responsibility of the network to effectively make sure that all the merchant side banks and ecosystem participants are connected with the customer side banks and participants. So that's really what a global network like Mastercard does. So we have built this network of over, which is present in over 210 countries. And that is the reason why, let's say you travel from here to Singapore or here to Dubai and bring a card from India, you can very easily transact without even thinking whether, the card is going to work or not. Give it, you have funds in the account, right? So that's broadly how the basic transaction processing works. Now, what has happened is a lot of fintech evolution has come about over the past few years. So let me talk about that for a few minutes. So the real fintech evolution started in, or let me put it differently. I consider a company like Mastercard or Visa to be a fintech because we invest a lot in technology to build new capabilities, to power transactions, to build intelligence on top of transactions, to use, AI, whether it is for um, uh, sc- uh, scoring of transactions, or whether it is for fraud prevention, whether it is for customer support, and we are investing so much in things like generative AI as well. So we have been in the fintech space for a very long time, but this new definition of fintech, which is the likes of a phone pay or a Paytm or all of these companies coming, I would say it started with the evolution of neobanks um in Europe, and that happened after the 2008 financial crisis. So during the 2008 financial crisis, what people realized was that the banking system is broken, right? So you went through a very, very tough time. I'm not sure how many of you, experienced it in person, because you probably would have been students and like children at that point in time. But it was a tough time for the economy. It was a tough time for a lot of people, right? The people who were reliant on banks, who had parked their funds in banks, when they saw that their funds were not being managed properly, or they were being missold products which had a lot of risks which were hidden. So that's when the entire thinking changed in terms of we need to come up with new ways to do banking or new ways to manage money. So the real neobank evolution or the digital bank evolution started after the 2008 financial crisis. Companies like Revolut, companies like N26. So they started getting uh, into the banking space, but in a digital way. So the approach was, why do you need so much traditional branch-based infrastructure to do banking all you can when you can do all of that using your phone, right? Or provide digital channels of access. So that's really where the fintech evolution started. Building on top of that, a lot of new capabilities have come in. So what I'm doing right now in Mastercard is I manage our API platform, right? So we have a platform called Mastercard Developers where we expose APIs to customers and they consume the APIs. So this is what I'm doing right now. But before this, I used to manage a program called StartPath, which is our startup accelerator program, fintech accelerator program, right? So we used to look at companies from across the globe. We used to scout for relevant technologies that are important for us and our customers, and bring those companies into this program, work with them for 6 months, and help them improve their product or get to new markets or get new customers. So during that time, I was exposed to a lot of new capabilities, things like eKYC, right? Traditionally, the process of doing KYC was you had to go to a physical branch and submit the documents. It used to be paper based. It used to take so many, days to complete the KYC process. And that's how things used to operate before. Now, everything is done digitally, right? Using your phone, using your bank's app, you're able to complete your KYC. You're able to submit the documents digitally, and then, make sure that you are the right person using AI and ML methods to verify that you are the right user. So those things are new technologies that have come about in the recent fintech boom. When I say recent, again, not really recent, but let's say post 2008, right? The industry is really old, so I would say 2008 to where we are right now is still a small part of the entire history. Then we started looking at companies that help in personal finance management. So we saw that consumers wanted access to credit, right? They wanted access to uh, lending, whether it is from their bank or whether it is from a fintech lender or whether it is from a microfinance institution. And then we realized that, okay, they need what is called credit score. So credit score became an important part of financial inclusion. So Mastercard as a company has been focused on financial inclusion. This is something which is in our DNA. We make sure that we do a lot of work in India, South Asia, in Africa to help the people who are, excluded come into the financial mainstream. And again, we use data, we use technology to help them achieve that, right? So one example that I can talk about is we work with a company called MFarmPay. So they're based in Africa, in Kenya and Ghana. So what they do is they help farmers build their credit scores. And how do they do that? So let's say there is a farmer in Africa and they have, a plot of land which grows barley, for example. So using data, so this particular fintech has data access from the European Space Agency, and they are able to get information about the weather patterns, about the climate patterns, about the land. So all of this is then consumed as one data set. They take information from the produce itself, right? So how much was this farmer able to produce, let's say, this quarter or this year? And how is it linked to the rainfall pattern? How is it linked to the weather pattern? So using all of this information, they are able to create a persona for this farmer, which with an associated score, which will help that farmer go to a bank and say, here is my score, right? And what does the score mean? The score means that next year I probably will be able to double my produce. So I need farm equipment, right? I need to buy a new tractor, or I need to lease a new tractor, or I need to buy fertilizers. Can you please help me with a loan? So somebody like this farmer who traditionally would not have been a customer for a bank because there is no history, there is no information about what his work is, now is able to go to a bank and say, here is my digital history of the activities that I do. And you can see, over the past 2 years, I've done well. I've managed to grow the business, and this is what my expectation for next year is. Please give me a loan, and the bank is unable to take a decision. So that was again one example of a fintech that we work with, right? So like this, in the program we have more than 300 fintechs, and I can go on and on about different examples of fintechs that we work with. So the point that I wanted to convey was, so starting with the foundational model, which was about solving the need for paying and getting paid, we started building a lot of new capabilities on top of the whole payments ecosystem. The payments ecosystem has evolved from just being a method to pay or get paid into much bigger things, right? So it's about elimination of cash in the economy. When you move from cash to digital payments, you are solving for, tax fraud. You are solving for illegal activities that happen, because a lot of illegal activities happen using cash as a method of payment. And when you digitize this, you are able to not just improve the payment transaction time for the merchant or the user, you are able to uplift the economy or uplift the country, reduce a lot of social ills in a significant way. Right now, we have in India a lot of benefits disbursement programs. So one of the programs which I did a long time ago in around 2013-14 times was pension disbursement in Nigeria, right? So we launched uh, a card to disburse pensions into Nigeria. Now, in countries like Nigeria, the biggest problem was theft. So let's say, my grandmother is eligible for pension. Somebody would use her credentials and take the pension money and then use it, right? And let's say this old lady is not able to get access to any information, they wouldn't even know. And we saw a lot of instances where people were using credentials of dead individuals, right? Pensioners who have passed away, their credentials were being used to take money from the system, get access to these benefits, and then steal it, essentially. So we launched this program where you can use biometric authentication every time a pension is being dispersed. So every time a pension is a person is able to receive or supposed to receive the pension, they call an IVR or call center, and using voice-based authentication, we are able to confirm that, okay, this is the right individual who's supposed to be receiving this pension, and that person is alive and has confirmed that they want to receive the money in particular card. So you are able to then make sure that the money goes to the people who deserve it, where it belongs, right? So the point that I was trying to make was, using a lot of these technologies, you are able to eliminate social ills. So it's not just about making sure the payment is done. There is a broader benefit, to having digital payments in an economy. Uh, so, so that's basically, like, I would say, a quick overview of, what we do, and what the evolution has been. Again, things in India are much better than most other places across the globe, right? So I right now am in a global team, so I get access to what is happening in almost all markets. And before this, I was managing Middle East Africa as a region, so I've seen what is happening here. But the evolution of UPI has been a game changer, and it truly is. So the way consumers are able to access the bank accounts and make payments using their bank accounts through the UPI rail, it's something which many people have thought of before, but execution was always a challenge. The technology infrastructure was costly. The economics of the transaction has been a challenge. All of there were many challenges to this. Um, when many people thought about it for a long time. But what India or NPCI has been able to do is build a cost effective technology infrastructure, get the right participants to come and play, right? People like Google Pay or a Phone Pay or a Paytm, like finding those participants who are able to then get the distribution at scale in a country like India. So on top of an infrastructure that is scalable has been the real how do I say, the real factor behind the success of this program, right? And then the economics with the government deciding that, okay, this is a public good, so nobody should be charged. That effectively motivated the merchants to accept transactions using this channel, because when they are accepting payments through a card, they have to pay what is called, a merchant service fee, which is, let's say, 2-3%, right? Or 1-3%, depending on the country. So through UPI, they are not incurring any cost. So it encouraged them to move into this digital method of payment, and they were able to get settled quickly, and it just became easy for them to manage their lives. So that's again a big change that has happened over the past few years. And now we are seeing that particular technology launching in different markets. So Brazil has launched what is called Pix, which is on a similar infrastructure. In the UAE, they are launching what is called IPP, Instant Payments Platform, which is on a similar infrastructure. So we are seeing that mushrooming everywhere. And again, India has been the poster child of how digital payments has to be done, and that too at scale. It's easy for a small country to do it when the scale is not big enough, but to do it at a scale that India has, it's by no means a small task, right? It's something really impressive that has happened. So yeah, I mean, I can talk about different topics, but I'll just take a pause here, and I'd rather hear from you if you have any questions, if you have any uh, thoughts that you want to share. I don't know what kind of projects you're working on at the hackathon. If there is, anything fintech related, that's awesome. Because we also do a lot of hackathons for developers in Mastercard. We've seen a lot of good ideas come out of these events. It's really a great way to, come together and build new cool things, right? And that can be turned into big businesses in the future. So yeah.
So, questions like, yeah, sure. So
Okay, let me
I
let me
can.
ask them. It's fine, right? I can understand they must all be busy in their thoughts and just headlines, so that's fine. How many like fintech projects are there in the hackathon? Any?
So just to clarify, the theme is fintech. So
Oh,
there are like,
okay,
so there is 12 focus areas
right.
in fintech, starting from compliance, like personal finance, like that. So
Okay, that's good.
there are 12 focus area in fintech.
Yeah. Okay. No, that's fine. Yeah, you were saying something?
No, I was not saying.
Okay. Cool. Great. So yeah. So I know you still have a lot of work to do. So all the best, for the entire event, and then looking forward to interacting with you in the future.
Thank you so much, Mr. Sham. Thank you.
Thank you.
Thank you.
Bye.